Yeah, today I will show you how you can use the 5-minute scalping strategy to make within 10% to 30% ROI. So the ROI either monthly or yearly depends on your settings. But right now, I want to take it to my screen right now so I can show you how you can use this 5-minute scalping strategy to make consistent profits in the forex market. Let's dive in right now. Now, the 5-minute scalping strategy is a very good strategy because it can definitely make you within 10% to 30% ROI if you really listen and watch what I'm about to show you. Now, the first thing I'm going to show you today is why trade the 5-minute scalping strategy. The reason why you have to trade the 5-minute scalping strategy is because it has fast entry and exit. So if you really want to trade the forex market and you feel like you really love scalping, you can definitely trade the 5-minute scalping strategy because you enter very fast and you can quickly exit the market. The second thing why you need to trade the 5-minute scalping strategy is that if you're kind of person that does not go anywhere frequently, like you have all the time in the world to scan through all the currency pairs the way you like, so this 5-minute scalping strategy is also for you. And the third reason why this 5-minute scalping strategy is very good is because it works on any pair. It works on any pair. Though I recommend major pairs like Euro USD, AUD USD, NZD USD, and other major pairs, but it really works on other currency pairs, and that's the reason this 5-minute scalping strategy is the best. Now, let's talk about something else, and what we want to talk about now is the indicators to use. Now, the indicators to use are the 50 exponential moving average, the 100 exponential moving average, and the 150 exponential moving average. The reason why I do use this moving average is because they try to show the wide view of the markets. So the reason why I don't like using the 20 exponential moving average is because the 20 exponential moving average causes a lot of noise in the market. Let me try to explain what I'm trying to say. Now, let's assume this candlestick formation here. So, and let's assume this is the exponential moving average, 20 exponential. You see, it reacts to the market immediately, and I don't really like that. But if it is the 50 exponential moving average, it does not react quickly to the forex market. Even if it is the 100 or the 150, like they don't react immediately to the forex market. So they try to avoid the noise in the forex market. That's the reason why I don't like using the 20 exponential moving average. Though your exponential moving average depends on you. You can use any other indicators apart from what I'm about to show you today. But this strategy really works well on 50 exponential moving average, 100 exponential moving average, and 150 exponential moving average. Now, let's talk about the rules now. So let's talk about the entry. The first rule is you have to wait for all the 3 indicators to point in the same direction. That is the first rule. So let's assume we want to talk about the buy condition now. The 3 indicators, that is the 50, the 100, and the 150, they must point in the same direction and they must be above one another. For example, this is the 50. Let's assume this is the 50 moving average. This is the 100 and this is the 150. They must be pointing in the same direction for buy condition. And you can see the 50 is above 100 and the 100 is above 150. But if we come somewhere here, this is the 50 here and this is the 100 here. This area here, this area there is not, this is not a valid buy condition because you can see the 50 moving average is below the 100 moving average, so that is not a valid buy condition there. but this area here is a valid buy condition because they are pointing towards the same direction. They are pointing towards the same direction. So now, this is the first rule you have to take note of. The 50, the 100, and the 150 must be pointing in the same direction for buy condition, and vice versa for sell. So if if you are talking about the sell condition, the 50 exponential moving average must be pointing in the same direction too with the 100 and the 150. So let's assume this is the 50, this is the 100 here, and let's assume this is the 150 here. You can see they are all pointing in the same direction, and 50 is below 100, 100 is below 150. So that is a valid sell condition. So that's the first rule. Wait for all the 3 indicators to point in the same direction. Now, let me show you here. I want to show you another example on the chart now. So you can see all this area here, they are valid sell condition. So you can see the chart right here. So this is the 150 exponential moving average, and this is the 100 exponential moving average, and this is the 50 exponential moving average. So you can see the 150 is above the 100 and the 100 is above 50, and they are all pointing in the same direction. They are all pointing in the same direction. So that's a solid sell rule. So this is the first rule. The first rule says all the indicators must be pointing in the same direction. Now let's check for buy condition too. So this is a valid buy area too, because from this area here to this area, you can see all the 3 indicators are also pointing in the same direction. You can see the 50 is here, so this is the 150 here, this is the 100 here, and you can see this is the 50 here. So you can see the 150 is below the 100, the 100 is below 50, and 50 is above them all. So all these 3 indicators must be pointing in the same direction to really show this is a buy condition. So that's the first rule you have to take note of. That's the first rule. Now let's talk about the second rule now. The second rule says you have to wait for the first pullback. So you have to wait for the first pullback. So let me explain. What do I mean by the first pullback now? The first pullback means, let's assume the 3 indicators are pointing above like this. That's for a buy condition, right? Let's assume they are pointing like that. The 50, this is the 50, and this is the 100, and this is the 150. Let's assume they are all pointing in the same direction. Now this is the candlestick formation. They're forming. So once the candlestick comes inside this area, this 50 area, or comes inside this 100 area and moves back up and closes above the 50 moving average, that is where we say the first pullback has been met. So let me explain again. Let's assume let's assume this is the price. Once the price comes inside the 50 moving average and closes above 50 moving average, we can say that's the first pullback. Or let's assume the price goes below 50 moving average, then goes below 100 moving average, then turns back up. We can still say this is the first pullback. But the market must not go below the 50 moving average. Once it goes below this 50 moving average, then this second rule is cancelled. This is not a first pullback. So the first pullback is 50. The price must go below 50, must go below 100, then bounce back up above 50. Once the candle closes above 50, then this first pullback is valid. I hope you understand. Now let's talk about the second pullback. Now, the second pullback, let me try to explain. Let me try to, okay. Sorry. So, the second pullback means once price comes below 50 or 100 and closes above 50 moving average, then comes back again, then closes above the 50 moving average. That is when this second pullback is valid. But don't forget, the second pullback price is greater than the first pullback. So it means this second pullback price, this is the second pullback here, this is the second pullback, and this is the first pullback. So this second pullback price, this area must be greater than this first pullback area. Do you understand? So this first pullback, once the market pulls back here and closes above 50, that's the first pullback, then comes back down again and closes above 50, that's the second pullback. And note, the second pullback price, this area must be greater than this first pullback area. So that is when the second condition is valid. Then we enter for our buy. Let me take you to the screen so that you can understand. Let me take you to my chart so you can understand what I'm trying to say. So let me show you now what I'm trying to say. Okay, let's look for a sell condition. Okay, let's look at this sell condition. You can see this area here, starting from this area here. You can see this is the 50 exponential moving average. This is the 50. Okay, this is the 150. Sorry. This is the 150. This is the 100. And this is the 50 exponential moving average. So you can see they are all pointing in the same direction. Now look at the first, this area here didn't close above this 50. So this is not the first pullback, but this area here closes above 50, then comes below 50. So this is the first pullback. That is the first pullback there. So we are waiting for the second pullback. This is another second pullback here. This is second pullback here. Price the price is above the 50 moving average, then touches the 100 moving average, then closes below this moving average. Then this is the second pullback. Then you enter for your sell trade. So this is where you enter for your sell trade. This is when you enter for your sell trade. Let's look for another example. Let's look for another example again. You can see this area here. The price goes above the 50 moving average, then closes below, then you enter for your sell trade. Then that's the first pullback. You're not entering for your sell trade yet. So that's the first pullback. So this is the second pullback here. The price goes above this but did not come down. So that's not a valid trade. That's not a valid trade. So you wait for the two pullback to happen before you enter for your trade. Once you see the second pullback and the first pullback, then you enter for your trade immediately. So that's the second rule. You wait for your first pullback. You wait for your second pullback, and the second pullback must be greater than the first pullback price. Then you enter for your position. So now let's talk about the exit rule. So the exit rule says the stop loss on the signal candle, you must have like 10 pips above it. Then your take profits can be 1-to-1 ratio or 1-to-2 ratio, or you can also set your stop loss to be on the moving average. Then you can add 10 pips to it. Then your take profits might be 1-to-1 or 1-to-2 ratio. Now let me show you my chart so you understand what I'm trying to say. So this is an example of your USD card now, and from here you can see our condition is perfect from here. It's perfect from here. So now you wait for the first pullback. So the first pullback happened here. The price closes below the moving average. That is the first pullback. That is the first pullback. Then you wait for the second pullback. Now you can see the second pullback here. Price is not lesser than the first pullback because this is a sell trade. This is a sell trade. If it is for buy trade, the second pullback price must be greater than the first pullback price. But for the sell trade, so the second pullback trade must be lesser than the first pullback trade. You understand? So this is sell. But you can see this area is not lesser than you wait for this. So you can see this is the second pullback. Our condition is still being met here. This is second pullback. This is second pullback here. Then the price closes below here. Then you enter for your sell trade. You enter for your sell trade. So you can see this area here. You can see price move above the exponential moving average. Let's check again. So you can see this area. You can see this area here. You can see this is the second pullback here. You can see, so you enter for your sell trade here. So you can set your stop loss above this candle. You can add 10 pips. Then you can take 1-to-1 ratio. So if your stop loss is 10 pips, so you can say your TP should be ×3 or ×2. So if it is ×2, if your TP is ×2, that will be 20 pips take profits, and you take your profit, and that's all. Or you can even set your stop loss on this moving average area here. You can set your stop loss on moving average. Let's check another condition so you understand what I'm trying to say. So let's check USD JPY. If you can see an example, USD JPY. Let's try to hold on. So you can see an example here. Our condition is being met here for buy trade. Okay, sorry, let me do this again. From this area, our condition is being met. So you can wait for the first pullback. So this is the first pullback here, first pullback. So we wait for the second pullback. This is the second pullback here, and you can see it closes above here. So this is second pullback. Then you enter for your buy. You enter for your buy here. So don't forget the second pullback price. The second pullback is greater than the first pullback for buy. It's greater than second pullback. You can see this is the first pullback here. So this scalping strategy is a very good strategy because this price action here, the first pullback is lesser than the second pullback, which means that the second pullback here is greater than the first pullback. Then we enter for your buy. So you can set your stop loss on this moving average or this candlestick area here. Then you can take your take profits to be 1-to-1 ratio or 2 or 1-to-3 ratio. So it depends on you. So that's what I'm talking about today. Now let's talk about another exit strategy. So another exit strategy is putting your SL, your stop loss on the recent low and your take profit on the recent high. So what do I mean? So this is what I mean. So if you enter for your buy trade here, you can put your TP here. You can put your TP here. Then you can put your SL here. You can put your stop loss here. So this is the recent low and this is the recent high. So if you once your profit is being taken here, you can enter for another trade here. The price comes down here. This is another pullback here. Then you enter for your buy. Once you enter for your buy, this is another TP here. This is another take profit here. Then this another SL, that's the recent low. You can enter for another buy position and the price comes. This is another pullback here. You can enter here. You put your TP here. That's another take profit there. So this is another SL. So that's another. This is another SL. This is another pullback here again. So this is another pullback here, but because this price closes above this moving average here, so we are not going to enter for this. So we are not going to enter for this trade. I'm not going to enter for this trade. So like this strategy really works. It really works. So this is another trade here. The market closes above here, then you enter for your trade here. So this is your, you can use this as your recent TP. You can use here as a recent TP. You can use here as a recent TP. Then you can use here as your recent SL. So you can see this about recent high and recent low as your take profit and your SL. So let's talk about this grid now. So you can also use a grid strategy to close your trade, because the grid strategy says when you enter for your first buy here and the market comes down again, you can enter for another buy. If the market comes down, you can enter for another buy. If the market comes down, you can enter for another buy. So if you can do this, once the market bounces back up, then you close all your trade. So you can also use a grid strategy to make profitable trades. So your exits, it depends on this. You can use your sell stop loss on the signal candle on the moving average, your stop loss on recent low and TP on recent high, or you can use a grid strategy. So this is how the this strategy really works. So I've done my back test on this strategy and it really makes sense. It gives like 10% to 30% ROI. Like I've said, your settings of ROI either monthly or yearly depends on your settings. You understand? It depends on your settings. So your profit of ROI depends on your settings. So if you really need a robot, or you need an indicator that can send you a signal once the first pullback or the second pullback happens, you can really contact me and you get it. And if you also want me to design a robot for you either on MKL5 or MKL4, I can also do that, though I have a robot running on that already. So if you really want something of such, you can contact me and we'll talk about that. So that is how the 5-minute scalping strategy works. If you have any other questions or you have any other strategy you want me to work on, you can just leave a comment in the comment section below. So till we meet in the next video. Peace.